Hey everyone, welcome to another Buddy Study Group for Worksite Solutions. And today we're joined by a good friend and partner of Buddy INS, Andrew Parr from Chubb. And you may have seen a session like this with Andrew once before, but if not, we're going to go through Chubb specifically, their list of voluntary benefits products. So, Andrew, I really appreciate you being here today and sharing some of your time and knowledge with us on a holiday, no less. And I know you have actually gone so far as to help talk to the folks on the study group about voluntary benefits products in general outside of long-term care. So we are excited to hear what you have to say and offer and share about Chubb specifically, their VB products.
Yeah. Well, thank you, Jason. And it's always good to be here. I see a lot of familiar faces, which is great. And to Jason's point, we're going to have kind of an open dialogue. I want to make sure we touch on just the market at large, because the exciting thing is that a lot of Buddy's associates are starting to see some success with the other products outside of long-term care. A lot is because the groups already have these products. It's easy to position them, but it also makes the long-term care offering much more competitive, helps drive enrollment conditions, and ultimately just makes you a much bigger resource as a consultant. So, with that said, Jason, can I share my screen here? There we
You
go.
absolutely can.
Mhm.
Yeah, and Andrew, if you can also just remind everybody if they don't know about your background, because I think that also is great context. You just have a lot of experience, even with other carriers on the voluntary benefit side.
Yeah, absolutely. Thanks, Mark. And yeah, so I've been in the employee benefit space for 12 years now. Spent the majority of that actually with Unum, which it gave me a great foundation uh, for voluntary benefits in general, but particularly long-term care. I was old enough to be around when they still had that traditional group long-term care product, which gave me a good foundation. But we really, as that product was going away. Realized that people definitely there was a huge demand, but we used the voluntary benefits entire suite to really help underwrite, assess the risk, and ultimately kind of drive those enrollment conditions. So, certainly have a long-term care background, but the things that you might not be as comfortable with, some of the other ancillary products, it's really shifted to technology, and the enrollment portion is the most important part. So, I would love to have some one-off discussions and really help you qualify clients, moving forward. And to my earlier comment, some of Mark's associates have seen some success, and I think they can attest and kind of provide some color about by positioning these, it made the long-term care product be much more successful, participation wise, offer wise, et cetera.
Thanks for that background.
Yeah, you know how humble I am, Mark. I don't like to talk about myself, so if you need me to do a bio, I'll send you it on paper.
No, it's good. I just
Yeah.
want people in the group to know that, Andrew's one of the main reasons that we really became aware of these other products, and just the way that he thinks about it and sells them and cross-sells them really was eye-opening. So I think you're going to get a lot of this session today.
Yep. Great. And so what we're going to do here is just, give you an overview of the market. I'm going to quickly share Chubb's overall product portfolio as we stand. And then I'm going to dive into two of the most common voluntary benefit products that you're going to see out there, which is accident and critical illness. And then give you a little bit of an idea of kind of a good prospect and how to qualify. And then to my point earlier, I would love to maybe do some more specific trainings on the products specifically as we have prospects that come up, and we can tell you which ones are a good fit. But by all means, please ask questions. I know Mark's group is always very good at asking the questions, so you can put those in the chat, and we will go from there. So first, I just want to touch on really employee benefits in the market. If you look to the left there, these are really what you're going to see most commonly at these employers that you're talking about. These are the first couple are what we call the core benefits. And I mean this in a very respectful way, but this is going to take up the majority of their time, year to year. It's a full-time process. We call them the core products, the health insurance, the dental, the vision, retirement, disability, etc. And that's growing like crazy, and the market is changing. It's not all employer paid now. There's employee contributions. It's very much a consumer-driven market, which makes it also difficult for HR teams when they're trying to navigate so many different demographics. You have 18-year-olds working at a company, you have 80-year-olds working at a company. They all have different needs. They all have different um, needs to how to understand the benefits. The younger generations, if it's not on an app, if it's not online with videos and really exciting things, they tend not to pay attention. My parents, for example, if they don't have a packet of information in front of them that they can file away and have conversations more on one-on-one, they're not going to be engaged. So the market has become much more complex. And again, this is what your HR contacts are going to be spending most of their time on. When you look over to the right, this is what we offer. And I left the long-term care in white just because you kind of are chasing people down to talk about long-term care. We know they need it. Employers know it's important, but it's not the most important thing that they're going to focus on, not because they don't want to, it's just the time, resources. And that's where Buddy does a great job of coming in and being that trusted advisor on the long-term care. But when I talk about those products on the left, these in yellow are very, very common. So you might go into a group and they've been looking at long-term care, they want to offer it. Majority of the time when you have a large employer, they're going to have these products in yellow either in place or they've talked about it. They might be making a medical plan change very frequently, and so to offset some of that cost, they want to put these in. So when you get familiar just with these terms, it helps you to ask the right questions, get the information, and then we can always include that long-term care with the proposal. But you're going to be pretty relevant when you go in there and start talking about these products, and it's just going to hit a little bit more. And it's more about how can you make their life easier. Maybe we can fit it on a system better for them. Maybe we can save them cost. There's a lot of things that we can position, and then that long-term care becomes so relevant. So hopefully you guys have had some experience with these, but I just wanted to kind of paint the picture of what we're seeing in the marketplace. And the products are evolving. Pet insurance is all of a sudden a very big topic and a product that's offered. Chubb actually just acquired a organization called Healthy Paws, and we're integrating that into our benefit portfolio. So that's one that, if you asked me 5 years ago, pet insurance, I would say you got to be kidding me, but it is very, very relevant now and extremely simple to underwrite, offer in conjunction with these products. So, any questions here at all when you look at some of these names and just titles of the products?
Yeah, just a comment. I really like one of the things that Mark was mentioning about liking the way that you position these benefits is I think especially when it comes to like the accident critical illness and how you lay that out, especially the accident indemnity, you think about it in terms of their major medical insurance, and I think that's a really important piece to being able to story tell and to be able to lay out the concept of the product and how it would be utilized, right? I think employees are looking for education on utilization. So when you know a lot about their major medical and what it doesn't cover, and knowing that if an accident were to happen, XYZ services may not be covered, or you may not meet your deductible and therefore would be exposed, or really anything around that, I think that becomes really important because you can put people in the shoes of having the plan and having some sort of claims scenario where they might utilize it.
Yeah, that's a great point, Jason. And you're going to find when you take the right approach to this, you're going to outshine your competitors. I can't tell you how many times we'll go into a group and they say, we already offer accident CI. When's the last time it was updated? Well, I don't know, a couple of years ago. Can we look at a copy of your invoice? And you look at, they've since then added an HSA. Well, the old product that was in there wasn't HSA compliant, or they have almost benefits that don't align with that overall package. And so it's really easy to do comparisons, poke some holes, show where we can add value, ultimately, hopefully save some cost. That makes it a lot easier when you have enhanced benefits. But it's a lot easier to compare those products where the long-term care is very specialized. It's hard to put one, even the life with the hybrid long-term care rider. It's hard to kind of put those apples to apples, and it's these are much different but easier for you to show your value and get them on the hook. And then you say, hey, by the way, to offer these, we need to, put in the long-term care and to get what they want, the enrollment conditions, et cetera. So very good point, Jason. We'll talk about that a little more here in the presentation. So this is a snapshot of really our supplemental health and voluntary benefit portfolio. I say that just because the long-term care product, which I think is one of the best in the market, and certainly Buddy is very supportive. We are rolling out an enhanced product we're going to call that like LBT 2.0. You'll have the official name here. I can't say too much. But I see Patty's on the line. You'll be happy to know that we do have the product now approved in the state of New York for 7/1 effective dates. So we can talk about that a little more offline. I'm going to have more information very soon. But I think it's important to put that on this list just because we view this really as a voluntary benefit. And we take an approach to the market. We're going to go qualify this as a voluntary work site prospect. And so I'm seeing a trend, and Mark, you can step in, but where you look at those life with hybrid products, they're very relevant to the other voluntary benefits, and employer groups are viewing it like that. Whereas maybe some of the more individual long-term care backgrounds, it's so specialized, it's totally separate. I'm seeing that it's very rare that we're getting quotes in. Now it used to be the accident. We want accident, critical illness, and disability. Also, can you please throw in a long-term care quote? It's just very much lumped together. So it's becoming very relevant if you take the right approach. If you forget the other ones, that's when the other broker that might already be in there has had a relationship for 10 years is going to be ahead, and it's easy for them to say, "Hey, I also know long-term care. I'm going to throw a quote in." But if you're just talking about the long-term care, you could lose that business just by the other broker kind of already having these products, and they can certainly add it on. So, really the common ones, we'll talk about these more, but the accident, the critical illness, disability, and then the Cancer Advocate Plus. I think those tie in very well for overall kind of financial wellness, and health. You're putting in long-term care really to protect assets. But there's a lot of critical illnesses that are tied to to someone that needs long-term care. Same with accident. It's just about offsetting some of those out-of-pocket expenses. And as we know, with the state of the long-term care market, those standalone hybrid life policies are not really enough to cover everything that they need. So, any questions here on anything that sticks out? If you have any familiarity with offering these, happy to answer some questions there. But I want to just really paint this picture and make sure you see that the life with long-term care product is really part of the overall, voluntary solution and portfolio now.
Yeah, I think Andrew, from my own personal perspective, looking at portfolios across a number of different carriers, I think where I find my education may be lacking in regard to one or several of these is really hospital indemnity. Can you kind of give us some flavor as to where that is most commonly sold, how it is most often utilized, maybe sweet spots of that product, where if we're hearing something from an employer about a potential need that they have, I can kind of identify this as a tool in the toolbox that I could pull out.
Yeah. And let's not overthink this. So the hospital cash product is there on the list. Really what this does is it provides a benefit, usually in the form of an indemnity lump sum, when somebody is admitted to the hospital. So that's not just going to an emergency room. We'll talk about accident insurance here on the next slide. But the hospital cash is what, let's say you go in and then they admit you to the hospital. Well, there's usually deductibles you might have to meet, right? There might be a $3,000 deductible, $1,500 deductible, whatever that may be. Even if that's covered, if it's not going to be a percentage of that out of pocket, but you will pair this with, an admission benefit. So that's usually the first thing. So let's say you get admitted to the hospital. Sometimes pregnancy can be included into that, depending on the offer. But okay, you get admitted to the hospital, it's going to pay you $1,500 lump sum to help offset some of that cost. Then we can structure that in a lot of different ways where, hey, if you stay in the hospital for a certain period of time, it might pay you $150 per day that you're there. If you get admitted to the ICU, it's going to pay another benefit for that. You can structure that for, up to 10 days, 30 days, etc. And that's where when we get a simple summary of their medical plan, we can look at that. And now that some groups are going to see there's three or four different types of medical plans. A lot of times the younger employees will have a much higher deductible or more of they something that's going to be they hope to be healthier when they're younger. But if they go and get admitted to the hospital, there's a lot of out of pocket costs. So it's very easy for us, and that's where I will do the work for you with analyzing this. But you want to make sure they're not overinsured, not underinsured. But it's like if they have a $2,000 deductible, we should structure that hospital admission benefit to be $2,000. And it's a much more affordable product than what you're going to be used to seeing when you look at long-term care. based on age, but it's something where they pay a little bit every paycheck, and then if they need, they have some big out-of-pocket exposure, they're going to be happy they have it, and it's gonna cover, a majority of that. But
That
that's
makes a
where you
lot of
can look.
sense. And
Yeah.
I think a lot of these products, especially, in my early days when we started enrollments with some of these voluntary benefits products, your advice definitely carried through of don't overthink it. And one of those reasons I found for that was that these plans, when they are proposed, when you get a proposal in hand, you're generally looking at a formulary, right? Especially for accident. And I would assume we haven't used it a whole lot, but the hospital indemnity is likely going to have something similar where for each and every possible scenario, you're going to have kind of a payout number attached to that. And there's a lot of analysis that goes into it, but a lot of it, I think, is really down to getting that proposal in hand, leaning on your experts to do the analysis, and then kind of understanding how the story would work for utilization from there.
Yep, that's perfectly said. And I think too, most of the long-term care plans are going to have a 90-day elimination period, or this is first day hospitalization. So it's a period of time that you can kind of tell that story. It's going to be a nice compliment, but yeah, you get admitted to the hospital. We can structure it many different ways. And a lot of times we'll see is you get the concept across the HR team. They're all very familiar with these types of products. And so they might even say, hey, we're going to go with you. Now let's sit down and let's really structure this for the new benefit offering. Maybe they haven't even made their decisions on the medical yet, but it gives them, some good ammo that they know that, hey, they want to go with you for your expertise, but knowing that, hey, you can be flexible. We're going to take a consultative approach. It's tough to go in there and get a CFO or an HR director super excited by just talking about the provisions, and it's more about here's the need for it, and here are the options. You can get $1,000 to $3,000, whatever, and sometimes we'll offer this where there's like plan one and plan two. So the employees can actually choose. It's very much a consumer driven type of a market. So yeah, great points there.
And one
If there's
other
not
one
any
other
more,
thing, Andrew,
yeah.
is for those of you who may run into objections. I've heard folks saying, I was so close to being able to work with this group, but they kind of gave me the objection that they're working on retooling their major medical. A discussion just like this is a way to continue that conversation and say, hey, I also work with a lot of other voluntary benefits products that really help fill the gaps to health insurance. And it ultimately may help you in that overall health insurance decision and those coverage amount decisions to know that there are maybe less expensive gap fills out there. So it may actually help you in the process of structuring those benefits.
No doubt. And that kind of goes back to my comment initially, how they're almost forced to spend a high percentage of their time on the major medical and the other products. Like they have to offer those, and it's becoming much more complex. And that's that. I see that common objection all the time, and they're not lying. It's just, hey, sorry, we're in the middle of a new technology build, or we're trying to finalize our medical. It's they've had a really challenging renewal. Are they looking at maybe going self-funded versus staying at fully insured? There's so much that goes into it, and they got to make the right choice. And so that makes this, again, like Jason said, much more relevant. You're going to go in there, and they're also probably looking at these types of products as they're making their decision on that. So they're going to give you a lot more time, and then they're going to be offering a couple voluntary products to add the lifetime benefit term is very simple. It's like, yeah, well, of course we'll do that. Let's get that done. We'll talk about it, secondary. But it just becomes much. I like to kind of use the word, relevant and sticky is kind of what we use. It just gets them where they want to call you back and, hey, can you take a look at this for me? And the good news is like, we will do most of that for you. Um, and have those client discussions. And Buddy's by far the best I've seen in terms of breaking down education and tying in the long-term care into these. And HR teams want that too. I mean, they need help with communication. They need help with the enrollment. So just whatever you can do to stay in that conversation, and these products certainly help with it. So,
Yeah, and
um,
Andrew, I want to also mention because early on, there's discomfort in offering something that you've never maybe worked with before. It's easy though to say you're offering it proactively. So when you're RFP, you can ask for it and you're not going to be required to offer it to the client if it's not a good fit. So I would
Totally.
always recommend just doing it anyway as part of your RFP process. It doesn't hurt you. Andrew's been really gracious at kind of helping customize the plan design, and being that consultant for us. So you don't have to even know what to ask for. Just say, I want an AI, CI, hospital indemnity quote, and then it will just be on that same quote as your life with long-term care product. And then you can decide later what to do with it.
That's a great point. Absolutely. And we can even kind of structure something because the proposals are long, right? But maybe you can do like a customized one pager with Buddy about these are included. Here are the different options. We don't have to, decide it now. It's just to keep you in that discussion. And I think it'll be refreshing actually when you see how simple the products are compared to kind of like looking at all the definitions when it comes to long-term care, even some like long-term disability contracts. These are commoditized products that you customize kind of after the sale, and then they become very, very relevant. So an example of that, I'll move into accident insurance. I only say that because this is probably the most common benefit that you're going to see when they start talking about this. This is designed to help offset out-of-pocket expenses when somebody has an accident and they need medical care. So let's say you have an active family or you have a younger employee, and this is something that they need for sure. If you're playing in a soccer league and you fall and you sprain your ankle or you break your arm, whatever it may be, you might have great medical insurance, but you have to go to the emergency room. There's a deductible or there's a copay with that. There's appliance fees. You get x-rays. You get charged for that. If you haven't met your deductible, that could be a significant amount out of pocket. So this provides coverage that essentially lines up to a benefit schedule. And it says, okay, hey, you went to the emergency room. Again, it's not tied to a percentage of what they actually paid out of pocket. It's you went to the emergency room. Okay, this is going to pay $150. You needed a crutch. Okay, that's an appliance. That's another $200. An X-ray, okay, might be, $300, whatever it might be. And then you need follow-up visits for that. Doctor visits. You have to go to see a specialty. If you have to go to get rehab services, it pays benefits for that. And this is generally inexpensive. I mean, it could be in the $3 range per week to, higher depending on the plan design per the employee. It's not even based on the age. It's very simple. The employee can enroll. There's an employee rate. The employee can enroll for themselves and their spouse. There's a rate for that. If they have a family, they check the family box. There's one rate for that. They're covered. It's always guarantee issue. That's big. Meaning there's no medical questions whatsoever. There's no underwriting. And that goes for every enrollment. So the first time it's offered, it's guarantee issue. And then usually we structure that again where they're going to enroll, it's guarantee issue. There's no pre-ex. And what it does is it drives participation in enrollment conditions only because a lot of times we're going to go in and we're going to have an invoice with a high percentage of people, it might be 40% of people that already have the product, but they've heard of it. So they're going on there, and we usually see 70% plus of people that actually engage just to look at it. And what that does is that drives, okay, we're going to be able to talk to 70% of the people. What else can we educate them on they don't know? That's where the long-term care, the other products, and come in. Minimum 5 employee apps. So we're going to get a lot more than that because it's inexpensive. It's so relevant to everything they do, almost any age, right? Um, and again, the pricing is extremely affordable. It's fully portable, so they're going to get that group pricing, the guarantee issue. If they leave the company for whatever reason, they take this with them. Majority of the time, they don't even port because they're going to a different company that offers something similar. It's just a very, very common, relevant benefit. There's things that we can do with the sports package, which is really good, and that's where I'll come in and look at the demographics and ask them the right questions. But if we have if that's something that resonates, then we do the marketing and we start talking about this. But it increases each benefit 25% for accidents resulting in an organized sport. Um, and then there's wellness benefits. And the wellness benefits are very common, but the way that works is, there's a wellness benefit separate from any sort of injury or accident. So when I say, um, think about, okay, if you go get your annual physicals, you get some testing, you get cancer screenings, mammograms, things like that. There's a wellness benefit usually tied to this. So let's say it's $50. All you do is you file a wellness claim and you get paid that $50 directly to you. If you have a family of five, it's going to pay for every individual. I just get my glucose checked every year, and that's covered. And when I was much, at one point we had a group where the cost was less per year for an employee to have than the $100 wellness benefit that we had on the plan. And we were sure to highlight that, indirectly, but um, it really, and people say, well, why would Chubb? We're not the only one. Wellness benefits are very relevant and common because we want to incentivize a big portion of our insureds to take their preventative measures, and we have tangible, credible, data that shows that it does lower claims across the board. Keeps them out of the emergency room, it keeps them out of getting things that we have to pay out once they go to the doctor. But this is one that you're going to see, and it's just very, very simple. And Buddy and Mark have had some success offering this specifically.
Yeah,
Any
and
questions?
Andrew, you helped me a lot with coming to some of these realizations of just product market fit, overlaps with long-term care, things of that nature. At surface level, you can say draw a link to accident insurance and long-term care and say, well, accidents can lead to a long-term care claim and boom, there you go. You're covered for kind of both aspects of it, right? The out-of-pocket cost for the medical, but then also the caregiving. But there's a lot more to that. When you're speaking to groups that really range in age, you have to think about what employees in this employer group may not resonate with the long-term care, but could certainly resonate with the accident. And think about objections you've gotten. Plausible deniability, right, is probably a big one with long-term care. Oh, I'm not going to need long-term care. I'm just going to pass away. Or if it comes to the point where I need care, I'm going to drive my car off a cliff. Yeah, sure. Of course. Everybody has their own story that way, but I think there's far less plausible deniability that you are going to have some sort of accident in any point of your life. And you hear accident, many of us think about like AD&D. This is not the case. If you
Great
think of
point.
your own stories where you've had an accident, I have a very simple one with my girlfriend who cut her toe on glass, right? Had to go to the emergency room. We were in Joshua Tree out in the middle of nowhere. And she had to get stitches and all this other stuff that really would not and was not covered by her health insurance because she doesn't have an accident plan, right? So tiny, tiny things like that, there's a lot less plausible deniability. And for those who are young and not ready for long-term care yet, they're ready to protect themselves and their children and their families from even minor accidents.
Yeah, Jason, I'm so glad you said that. You're going to hear the word accidental death and dismemberment, AD&D. That still should be offered. That's usually tied to group life. You don't have to have both your arms cut off to get paid out, right? What those benefits do is it pays out like a double of the life insurance or a percent, like, but those are catastrophic benefits. If you lose one limb, or this is the absolute opposite. I mean, Jason, that's a great example. I'll use an example for me. I was working a ton. I had a small sports hernia, and I play a lot of golf, and I was on a golf trip, and I kept putting it off. I'm like, I'm invincible. Long story short, my hernia got pretty darn bad, and I finally was like, I need to go to the emergency room on a golf trip. And they were like, you have to get into surgery in the next 24 hours. I mean, that was shame on me, working too much, but they were like, you have to get in here. Had to have surgery. I was young. I had a $5,000 deductible at the time. It was $3,000 just out of pocket. But because of all the things that led up to that, where they had to do the X-rays, going into the emergency room, there was also just a lot of different things post surgery too, the follow-up visits. But that was not covered on my major medical. Um, that saved me. The major medical saved me a lot of, I didn't have to pay the 40,000, whatever it actually was for the surgery. But the other things that came up were $3,000. If I didn't have this accident plan in place that I was paying less than $5 per week for, I wouldn't have paid out. Long story short, I got paid out over $4,000 directly to me, which more than offset my out-of-pocket costs. So I'm probably stressing a little too much, but it's not that accidental death and dismemberment. So when you hear that from employers, and they'll know, but don't shy away too much that it's those catastrophic things. These are very, very simple benefits. And I'll send Mark after the call just a schedule of the benefits so you can see a little more what that looks like. We also have a broker guide, which Jason, you have, and we've gone through. But the broker guide really shows you like actual examples and you'll see how common the things are that this pays out for. And then what we can do is we can tie it to groups when we get some claims information. We'll see a lot of these people are going in for this and that, and we always put together as part of the webinars or the employee meetings. Here's a scenario. Joe Smith, 22 years old, falls. Here's what he had done at the doctor or the emergency room, and here's what was paid out. So the more information we get, the more relevant. Think of this too. I'll mention a competitor in this space. They have a different model than us, but you'll see a lot of those Aflac commercials. Love the duck. They're great marketing, but he's always got like a cast on his arm. Well, it's accident insurance. It's very, very simple. It's very, very common, and you're going to go into a lot of employers that will say, "Hey, we already offer this through Aflac. Great. Can I have an invoice?" We look at that invoice and we can from there, I mean, just by the code on it, really break down that product and poke some holes. And it's so much easier to replace. Again, when you're going to go on with that long-term care only, it's apples and oranges on what they might already have. A lot of times they might have some old legacy group long-term care. So then you're trying to compare pricing on the hybrid versus, the old group plan, and you're just not going to look that great. So, any more questions or comments on this one?
Think we're good to keep going.
Okay. Another one I just wanted to touch on was critical illness, which is probably just as relevant in terms of popularity as the accident, and they're usually offered side by side. Again, the accident is for something that is for accidents, injuries, falls, things of that nature. So think more like physical type of injuries and conditions. The critical illness is designed in the same way to help offset out-of-pocket expenses, but when you have critical illnesses, things like cancer, heart attack, stroke, major organ failure, end-stage renal failure, Alzheimer's, Parkinson's, ALS, different childhood conditions like cleft palate, things of that nature. The way it works, it's offered as a voluntary benefit. You can usually choose between 10,000 to 30,000. We negotiate a guarantee issue amount. We usually waive the pre-ex, or if we're going to take over a plan, which is very common, we have continuity of coverage, or we'll no loss, no gain, or we'll waive that pre-ex for the people that had prior coverage. And it drives participation. But when you go back to that amount, so let's say someone has $30,000 of coverage, they enroll for 30,000, they have a heart attack. Well, it pays out a $30,000 lump sum benefit on an indemnity basis directly to that employee or that insured. Cancer, stroke, as you know, I mean, a lot of these critical illnesses, there's just out-of-pocket costs that pile up that people won't even think about until they need it. I mean, again, you might have the best medical plan, you might even be in a good financial situation, but if your loved one gets cancer and you're taking them to treatment that might be a couple, maybe 100 miles away, you're getting hotel rooms. Your spouse is taking time off work. There's a lot of burdens that come up. So to have this, payout is just very helpful at a time when they're going through a very difficult situation. We go back to the drives participation. This is big, because a high percentage of employees already are going to be actively participating in this type of product, or they're going to pay attention to it. Whereas if we're going to do a self-serve, standalone long-term care off cycle, every group is different, but we're chasing them. Mark and his team are doing these webinars. They're following up. We're not chasing. With a standalone long-term care, there might be, Mark, what would you say? I mean, a standard percentage of people that are going to go through an enrollment if there's not really a ton of support from HR. It's a low percentage. With this product,
Under 5%, yeah.
yeah. With this product, we're seeing 70% plus of just active engagement, meaning that this might be tied to their current enrollment system, or they've heard of this. And so, like, just to have that audience. And of course, when we are offering this, we make them go through all the products. And that's because we know it's a good fit. We want them to know about it, but they're not like, a 26-year-old who hears long-term care. Oh, I'm going to skip through that. I'm not going to pay attention. I don't need to go to this. It's, so we use this to really, again, drive that engagement and those conditions. Makes our underwriters much more comfortable too, because they know we're going to get this broad audience. And it's just very relevant across the board. Participation is again minimum, 5 apps. We're going to get much more than that. Fully portable. There's recurrence too, which is nice. So it's not like it's one and done, depending on the condition. And we talked about the wellness, which kind of ties in. And this wellness is separate from anything that's on the other products. So it's going to pay out for each one. So think about that. If we had a $50 wellness on this and we had a $50 wellness on the accident, we're offering these in conjunction. That's $100 that someone's going to get just for doing their preventative test. And most of those preventative tests, there's 26 of them, those are covered usually 100% by medical. So we use that. That offsets the cost that they're going to have to, not directly. We don't market it that way, but it's nice. They're going to get $100, and they're used to doing that with another product they've probably had. Um, so we just see a lot of good participation across the board. HR, again, these are relevant. They're already offering them, or they're going to because they're making a medical plan change. But I think that these two complement each other. But this one specifically, and we've had some good conversations with Buddy. I mean, this complements long-term care really. I mean, Alzheimer's, Parkinson's, some of these things that are on the cover conditions are what lead to long-term care. Might take several heart attacks or several bouts, but when someone's older, they're gonna need assistance getting taken care of with those conditions. So,
Yeah,
did I miss anything
100%.
here?
And it's all about, medical expenses versus the cost of professional caregiving. And long-term care is going to cover the cost of professional caregiving, and the critical illness is going to help you with a lot of those, ancillary medical costs that come with it. Some that are very on paper and others that are softer. And I mirror what you say, Andrew, about cancer diagnoses and having to really travel to find the correct type and quality of care for you. Because in San Diego, we have a really top-notch breast cancer treatment facility here. And I've had visitors, and not necessarily for the greatest reasons, but because they've had to come to San Diego because it was recommended they come here to receive their breast cancer treatment here. So there's a lot of travel involved with that, and San Diego is not necessarily the cheapest city in the United States. So you are staying here generally for weeks or months at a time while you receive that treatment. So that's a perfect lineup for something like a critical illness plan. And one
Yeah,
other thing I just want to mention on top of this is, along with the accident and some of these other plans, the premium structures are really interesting. You normally will see something like your employees can apply and your spouses can apply separately, and there are child coverage riders. But for these plans, we actually see premium structures of employee, employee plus spouse joint premiums, employee plus children joint premiums, and whole family premiums, all of which we find to be very, very affordable. So that's something that's interesting as well, and also leads to a pretty easy process as far as I'm concerned.
yep. You said it perfectly. Um, so any more questions here on these two products, and maybe the next one we do, we can
Yeah.
dive into the Cancer Advocate Plus and some other things that tie to these. But I just think the accident and the CI are so relevant, and you're going to hear those when you start asking these questions. They're also very simple. So we like to be experts, but there's not a you guys will master this, and after you get through your first case, it's not very technical, so we don't want you to shy away from it. Just want you to see how simple it is and how relevant it is.
Yeah,
And
one
and
other
Mark, sorry, go
thing
ahead.
I want to mention is because they're a lot lower priced than the long-term care, which tends to be a higher benefit and more comprehensive. That's also what's driving a lot of the participation is it's just affordable. It's not a big decision for people to make. They can change it the next year very easily. I think that's also when you said 70% plus participation or things like that. It's because it's one of those things that people just don't have to think too much about in the scheme of things.
Totally, yeah. And when I say that 70%, that's not so much the 70% of the population that's enrolled. It's just if you were going to do like a standalone, that's 70% engagement, where a high percentage of the population is like going to pay attention and they're going through this and they're on the webinars, and we're not chasing them, so to speak. It's like they
Yeah.
want to talk about it, and then we
What
talk
what
about
what percentage do you see enrolling, just out of curiosity, in an accident CI hospital indemnity type of plan?
It
And
just really depends on the type of the group. But 20 to 40% is really what we're looking at for these types of coverages. Whereas, long-term care standalone, 2 to 5% is pretty common.
okay.
Yeah. You can also do these as employer paid, the accident and certain things, and we'll talk about that as prospects come up. Um, but yeah, the big thing though is drives participation. That's why people say, well, why do you guys want to offer these products in conjunction with, every quote we have or include them? It just gets us much more comfortable. It's going to help prevent the adverse selection that we might see at a large employer when we're just asking for long-term care. It's like who's showing up for the enrollment when we're offering the long, it's maybe the people that aren't healthy. And if we get five people to enroll, one claim is not going to, keep that plan, healthy across the board long term. So, um, any questions here on this?
Think we're good.
Okay. So what to look for? I say employer groups of 200 plus lives. Realistically, 1,000 plus eligible is your sweet spot. Only because think about it, if we're going to get that big engagement, if you're going to get 70% of people to pay attention, the higher number that you have, that's more of a captive audience. And allows us to just educate them more. Plus, you're going to do just as much qualifying if you do it the right way, just as many meetings usually, and just as much work on a 27 life group as a 1,000 life group. Sometimes less because, and I mean this in a very respectful way, but you'll see that sometimes the larger companies have more resources in HR. It's more turnkey. They're like, oh yeah, here's our formal bid process. I mean, they have better marketing. They have, it's more. How do you become an extension of HR at that point? How do you become maybe a little bit of enhancement of the enrollment, benefit education? Whereas some of the smaller groups, it's they have the same exact needs, but there's one person doing it, and they're also doing a bunch of other stuff. And it's just hard to you're gonna. So when I say 1,000 plus, you're gonna get a much better offer at that point. You're going to so if I was looking at like just prospecting, I'd be looking at probably that 1,000 plus number. You also are going to look for groups that are looking to improve their overall ancillary benefit package, and we're already doing that. I mean, that's why a lot of groups want to offer long-term care because it's hard to get, and it makes them much stronger to attract employees, but also add in there groups that are making medical plan changes. That's happening like crazy in California, and a lot of times they're not sure where to go. They're just taking these increases. One, lack of time, lack of resources to enroll, but these products help them maybe make a tougher decision and say, hey, we're going to have to increase the deductible, or we're going to this plan design. However, now we're going to offer hospital indemnity with an employer paid accident and might be an eighth of the cost for the absorption they'd have to take on the medical increase, but they can actually now have a story and give employees choices instead of, hey, here's the only plan we have. No, nothing you can do about it. This allows it, we kind of call them consumer-driven health plans now, where there's a lot of options. Employees are making their own decisions based on their different needs, based on their demographic in the workplace. So that's I'd say, in certain areas of the country might not be as common, but that's all. When I talk to brokers, they're talking about, it's medical renewal season. And, there's so many different strategies and opinions and ways to go about it. And then most importantly, do not be afraid to ask for the invoice. Um, it's not salesy. And it's literally, it tells us a couple things for that. One is how many people are currently participating, right? We'll be able to tell really quick, like the trends based on the percentage of participation. What's going well, what's not going well. If they have low participation, what is that? Maybe they have people that are spread out and they haven't had like, some good technology resources to actually educate the employees. But that invoice or listing, it's just really, I call it the blueprint. It shows us right away what people are paying. Um, Commonly too, like you'd be surprised, you'll get an invoice and could be some Aflac product or something that was put in there years ago, but they have a really high percentage of people that are paying a ton of money for individual short-term disability. And it's like, well, hey, don't you guys already offer employer paid disability? And they're, well, yeah, we do. Well, why do you have all these employees that are overpaying, being overinsured? And sometimes they're like, oh, we weren't even paying attention. We didn't even know. It was a long time ago. And But you go in there and you're just already you've done your homework. So the invoice is something that you kind of tell them, hey, to effectively do my job and really show my due diligence here and get you the best offer, we need to have some kind of um, blueprint to go. So that's very common. I mean, so I always say, and it's not like pulling claims experience or NDAs. It's just, hey, do you have an invoice or a snapshot of what you're currently offering? And that helps us, get the best offer for you. And then it's all is tied to the from the long-term care perspective. When we're able to say like we have all these lines of coverage in play, we're structuring it from an enrollment perspective. We're getting the conditions. That's when you're going to get that higher guarantee issue from us on the long-term care. That's when you're going to get the extension of benefits too, very easily. And I know that Mark and Jason have personally seen that. One group that probably would have been a 20,000, it was a small case, like 150 lives. They offered the other product, and that became a $110,000 case, I want to say, a nice little case study. And let's not forget that these products also pay commissions, pretty high commissions, the heap comp, 70% first year for critical illness, et cetera. So that helps fund some of the other stuff that you have to do, the extra lifting when you have to educate people on that long-term care. So hopefully that made sense. I mean, this is usually where a lot of questions come about size segments. So I'll pause there, but
That
anything
makes a
else
lot
you'd
of
like?
sense. And we had a question. Do you get the health insurance invoice too when you're doing these reviews?
Well, so we want to get as much information as we can on that. The invoice is not the most important thing because we're not like going to go in there and replace the medical. There'll
Right,
be some medical brokers. It's more just so we know like, do they have high deductible? Are they self-funded?
right.
Are how many people are participating? So we want to get if they give you that, great. But the invoice here is more because we can actually see like what the employee's paying. I mean, how are they structured? How's their even their pay cycle, things of that nature. So I would say on the medical, you want to say, more about do you have like a summary of benefits? Do you have the plan designs? But we can help you with all that. I mean, that's where we get on a call and we really drive that conversation. And it's amazing too because they just start talking. Like for these benefits, I had a great mentor early in the business. He was rep of the year at a company for many, and he sat me down and he's like, here's a and he was sold more voluntary benefits than anybody in the company. He said, I go in and I don't even start talking about products. Well, I ask, can I have lunch? And we start talking to the HR team and the HR director, and just as a kind of a student in the industry, I want to learn from you and what you're going through every day. And how's open enrollment going? And they just tell you, and they become an open book. And they start talking about, I just had to lay off two people on my team, and now we're adding a new system. And well, what system is that? What are your goals with that system? And you take these notes, and then how's medical renewal going? And they almost kind of vent and tell you exactly what you need, and then you can piece that together and you actually can get funding when you offer these products with a good strategy. What I mean by that is, there's tech credits that are involved. They look at carriers to kind of help offset some of that cost, pay for some of that cost. And so that's a really good question, but it's not so much about getting that medical invoice because you're going to go in and want to provide them a quote on the medical. It's more just so you can understand kind of their overall package scenario and get them talking. It becomes so much more of a solution, a value-added services type of a discussion. And how can we help HR and become an extension of HR versus just throwing a product at them? So, very good question there.
I'll just say, when I became more effective at learning how to market and learning how to educate and learning how to sell these plans is when I let my hair down, so to speak. And, Andrew was very helpful to me in going through that process because for many of you, like me, you'll have a hard time turning your long-term care brain off. You'll have a hard time turning your super, super due diligence and contract digging brain off to a certain extent to really just get to the root of what's important about this sale, these products, and the people they're meant to help. So that's kind of the biggest piece of advice I can give. If you don't overthink it, you'll start to understand the products a lot better.
Yeah, I'll add one other thing too, and you can approach this a lot of different angles. Andrew's an expert in these products, so he can lead with the AI, CI. I'm not an expert in the products, so I almost always lead with the long-term care. But a lot of times, the client that we're working with already knows about those other products. They may already have them in place, and they'll kind of mentor you. Knowing you're the long-term care specialist, they'll teach you as well about what they already have and what they're looking for. And then you can go to Andrew, right, and help get some advice as to, well, how do we design this given what I've learned about their plan? So you don't even have to pretend to be an expert in those products
Right.
if you are seen as a long-term care specialist. And a lot of times you can add on those benefits and it's just a value add with no friction whatsoever. They just want to have those products added. Maybe they don't even have those products at all. And so you're adding things that don't cost the employer anything but allows them to add value because they just have more options for their employees. So, like I
Yeah.
said, like Jason was saying, it's not that scary to offer as long as you know like the just the real basics that we covered today. You don't have to know very much more than that to move forward with it.
Yeah. And then I'll almost take another little anecdote, but you guys do such a great job positioning the long-term care, and Mark tends to bring me a lot of groups that okay, they're after 5 conversations, they want long-term care. Well, the example that I use, we actually use these products to get them what they wanted on the long-term care. So this group came to us. They wanted the Cadillac course. It was a smaller case, like less than 200 lives, and uh, we were kind of saying, well, we can't offer it. You're below 200 lives unless we package it with 2 other ancillary products, and that's just our standard underwriting offer. We weren't lying to them; we were telling them the truth. And because they Mark did such a good job selling the need for the long-term care, they wanted to have, the extension of benefits one, they wanted to have the higher guarantee issue and there was no choice. I mean, underwriting was not going to go down that low, and they didn't even question it. They offered 3 other voluntary products. It became a $100,000 case. The broker was thrilled on the revenue. I mean, all the extra revenue, and ultimately provided those employees with better products. And they already had a pretty healthy population of these products in there through another carrier. So that's another thing to think of too. Is like when you have a group that wants guarantee issue long-term care with a good plan design, well, you can do it, but there's no other options. If you want this plan design with this carrier, you have to offer these. And that's when you start, hey, well, let's look at the invoice. And then we really got granular and we broke it down. And so there's no right way to really slice it, but they're just very relevant. As you're talking to the employer groups about voluntary benefits, that's how they view that. They view when you're talking about the long-term care, they're thinking, it's a voluntary product. So when you have these in your arsenal, it just really becomes twofold. So
Yep. And also the minimum participation requirements on those other products is oftentimes lower than the long-term care participation. So there's not as much pressure on HR that they have to get a certain number on the books, and so maybe even going down as few as 2 to 5 policies.
yeah, significantly lower. I think on that one, and then another big one we had with Mark, uh it was 2 applications, guarantee issue. That was, I mean, no issues there. I mean, it's inexpensive, and so again, it's a great way to be relevant. And anytime you have a discussion on these products, I will love to have an hour. We can go one-on-one. This is where I can really add value. You guys are already the experts on the long-term care, but I really think it can help you sell that, position it, and ultimately make that endeavor much more successful from an enrollment perspective. So please do not hesitate to reach out, and I'll open it for questions, but thank you as always for being a great audience, and look forward to talking to you again soon.
Yeah, I think that was kind of all the questions answered in the interim, unless anybody has any other questions they have for Andrew while he's on.
I
Good.
have one.
Go ahead,
Yeah,
Donald.
go ahead, Donald.
I saw your comment
Um,
also about
it-
your experience with Aflac enrollment, so feel free to share that as well.
oh, okay. Well, just as background, I'm now a financial advisor who does succession planning and continuation planning for business owners. But the way that I got with that is I started at Aflac. And I was sitting down with all these business owners who are like, I don't want to add another line of business, especially in California. They're like, I don't want to do anything else for my ungrateful employees. I'm not even doing anything for myself. So found out they weren't doing any of their succession planning or continuation planning. So that's my main thrust now. But it also means I've been doing supplemental for 11 years. So I'm probably, Andrew, the opposite of most of the people on this. I'm adding LTC and I've got all this stuff down. But one of the things, just experience wise, and I wanted to ask you about it. It's not, I agree with you. It's not so much that we're going to be bidding on their major medical, but I always ask for the major medical and a census because they're used to every other broker asking for that. So when we'd come in and be like, we're just supplemental, and maybe if we could come in. So we were taught to come in the door. We got the same license every broker has. They expect you to ask for the census. And then at the same time we'd ask for the major medical because hey, if we're going to pair up the right hospital plan, we need to know what you're offering. Is that not what you've run into
That is
or
exactly no. That's a great. That's why I was saying like when I say ask for the invoice, it's not salesy because at first you're kind of thinking like I don't want to. No, it's like they you almost need that to do your job effectively. And yeah, they're used to giving that out. It
okay.
makes you much more yeah. But we don't necessarily need to have like when I say the I heard the word like invoice like the actual cost and what they will be a little careful on is giving you like 5 years of claims experience on medical, right? And that's where it's having the plan information on the medical is extremely important, and it's just part of the process, 100%. Did I answer
And
the question?
yeah, that answers the question. One other thing, I sent this to Mark quietly, which is why I was like, oh yeah, you used to work for Aflac. You had said 30 to 40%, but we used to demand like, hey, if we're going to do this, we're going to do it like an actual enrollment and one-on-one conditions. And when we used to get one-on-one conditions, we had a 72% enrollment rate. Do you guys ask for one-on-one conditions just like the major medical broker does, or is that just kind of like
So 10 years ago, I even say 5 years ago, one-on-ones were so common. And that's where we would actually, and I'll tell quick, how much time do we have? I have a little story that
Two
if we,
minutes, but nobody's counting. Yeah,
okay,
go ahead.
okay.
This is
Yeah,
worth
so the
it.
one-on-ones were like, I mean, that was the approach was, hey, we're gonna do one-on-ones. We're utilizing an enrollment firm, we're having people that are fly out to multiple locations. Um, in that time period, we have found s- technology has evolved drastically. I mean, everybody has cell phones now. Everyone's working. COVID really has changed the market in terms of more virtual type enrollments. But what we found was that the one-on-one aspect is still huge. It doesn't always have to be in person. Telephonic is now extremely popular, and we're seeing that people schedule those on their own time. So like they can call into a call center or do it in a Zoom, and they're choosing when they want to have that one-on-one meeting. And we're starting to see that participation is about the same. It's still a one-on-one interaction, but it's not so much where we're saying we're going into um, you know your location. Not we hear so much now, like, oh, we have people now that work from home. Half the population works from home. Sorry, we can't have you come in and do a presentation. So it's changed a little bit, but you still want to have that approach. And the anecdote I'll tell you, and how you get that hook, was, it's how do you become an extension of HR? So I'll end with this. I had a group early in my career, and it was privately owned company. They had like 4,500 employees. I mean, when I say blue collar, they made equipment for miners, like coal miners. They would make the pulleys and all the equipment for that. So, the owner of the company was great man, great business leader, but I mean, he's old school as it gets. In fact, the broker had to coach me up. He made me wear Wranglers to the finalist meeting, and he's saying like, because I said I just want to have a conversation with them, talk about their benefit package. I'm gonna sell anything. And he's just like, well, I gotta tell you, he tries to vet people. He's gonna think you're a young hot shot, whatever. So we go in, and from the very beginning, he's saying, I would never offer this stuff to my employees. And we were taking that approach, like, we do one-on-ones, we do education, and he's very maternalistic. He's like, I would never let you talk to my employees. Are you kidding me? Like, in this accident plan, I don't believe in that. They should be putting stuff in their 401k. And I wanted to look at him and say, well, you're a multimillionaire. It's different from someone else that's making 40 grand a year living in West Virginia or wherever. So long story short, I just kept going through my probing questions, and the broker was like almost tapped me, hey, we got to get out of here. He's gonna blow up. And I finally said, well, if there's one thing, sir, thanks so much for your time. Really appreciate you being so thorough and caring about your employees. But if there was one thing that you would like to tell them or communicate to them that you don't think that they get across or anything at all, like what would that be? And the broker's like packing up. He's like, all right, we gotta go. And I saw him looking out the window and he says, "Hey, see this parking lot?" I said, "Yeah." He's like, "I just spent $250,000 repaving that, getting it all set up so employees could have free parking." And every single day now we're starting to get cars that are towed. We don't know if they're actual employees or if we had one phone call that a manager in the manufacturing plant's wife's car got towed. He was driving her car to work, and it seemed like a simple problem, but he was, he's very old school, and he's like, I'm not spending another dollar for these ungrateful employees that, think that I'm trying to give them free parking, and then now I need to hire security guards, this and that. And I looked at him and I said, we can solve that problem through the administration of voluntary benefits. The whole room kind of started laughing, and he's like, "I don't know, kid. What do you got?" I said, "Well, we just talked about the fact that we have a team. We'll sit down with all your employees. We're going to educate them on even the products that we don't offer. We're going to educate them on. We're going to understand what the cost that you're paying, make them walk away with a much better overall feeling of the benefit package. So they appreciate that." He's like, "Yeah." I said, "We could also very easily, if you give us access to your employees, so you mean that we can go meet with every single one of them and give them a comprehensive review here. We can build into the platform. We could do it as however you'd like, but we can make sure they register the model, make, vehicle of their car. And so when they enroll for their medical and everything else, all you have to do is put that. And that next time you have a security guard that doesn't know if it's an employee's car, he just looks into the database and says, oh, yeah, that's Joe Smith in manufacturing. Very simple thing. But the point of that was all of a sudden he was like, can we do this enrollment next week? And everyone starts laughing
Yeah.
again. But we actually were able to start having a conversation more about like, what do you want to communicate? We're not going to sell your employees anything. We're going to have a 30-minute, 20-minute review with them, and we can start talking to them about a lot of different initiatives. And the conversation shifted from like him just being protective to like now I start to see and you guys are going to pay for that system. Of course we are. Yeah, we can. There's not going to be any out of pocket cost to your organization, and we had them, kind of on the hook there, but it was more about communication, education, and adding value to this process. But I'd never in a million years would think that, solving a parking problem would get us access to the employees. So to your point, we want that approach, but it's now more not just because you want to sell them benefits. It's what else can we do? And so that one-on-one connection is very, very important still. But now there's like 10 different ways we can do it versus, back in the day where it was like we have to come in and we have to sit with everybody in person. So that was long-winded, but just thought that was kind of relevant because you'll start having these discussions with people. You never know what's going to get. I mean, there's very rare to see like a CEO of a company that wants to give you access just so you can go talk about an accident product. So
Yeah, selling with your ears at the end of the day is timeless, right?
correct. Yep.
Awesome. Well, this has been a great session. Andrew, I thank you again very much for sharing your time and your knowledge with us today. I hope everybody picked up a thing or two that they can take with them into the future. And like Andrew said, like we always say, we're here for any questions, comments, opportunities that you have that you need help with. And I think that'll really do it. Andrew, anything you want to leave everybody with?
No, just thank you for the continued support. And I was being serious. I mean, if you want to, talk about certain prospects and these products, we can definitely get on a call. And I would just encourage you to ask for those invoices, ask and what other products they're offering, and I think you'll see it's much simpler than you think. And the buddy team is again awesome at customizing these communication strategies in a very simple way as well. So thanks again for the time and happy selling out there.
Appreciate it. Thanks, everyone. Appreciate you. Be well, and we'll speak to you this time next week. Have a good one.